We're going into our afternoon. We're looking at what opportunities we have going into the afternoon and then into the second half of this week. We're starting here looking at the VIX, and we're looking at the contract volume. And note here that the volume inside of the February contract and the March contract is split right now. And briefly this morning, it was the March contract was actually leading. And yesterday was rollover. So we have the volume split between the two contracts, and we have a difference inside of our trend from the perspective of the old February contract to the new March contract. And that's important because the VIX leads the broader markets. Volatility spikes, especially in the new contracts, when you have a type of risk-off type of environment. And so that's what we're going to be exploring here as we go into the afternoon. First of all, we're starting off inside of the dollar. And in the pre-market timeframes this morning, we had this dollar strength trade, and that was creating a potential inverse correlation, especially for the currencies and the precious metals, but it also affected the indices. And that dollar rally, inversely correlated, rolled the indices over coming out of the morning. Now, as we're going into our afternoon, we're actually right back down into its old support level. So this weakness event create a counter trend squeeze, and then we're right back at the dollar support level. If the dollar were to grind higher here, what would that do in an inverse correlation? The indices would weaken, the currencies would weaken, the precious metals would have a headwind. So we're paying very close attention to that now that we're at the bottom of that range again. Going to our bank chart, as we are going into the market open, we had this room for bank to fall back down into its support. Even though it is inside of a longer term bullish trend, that intraday weakness contributes to a headwind for the indices going into our morning. And there's still more room for it to fall back down into our support. As long as bank is falling, it is going to also create a headwind for the indices. And then we have the VIX. Now, when you're looking at the VIX continuous contract, all you really see is a gigantic downtrend. And it's true that the indices are in longer term bullish trends. But we have weekly shorts, daily shorts, and then we have the retracement from our highs of last week to lows that was front run at a 38.2% line. You really can't see anything when you're looking at the continuous contract that would be perceived as bullish on the VIX. In fact, we also broke through in the February contract. Note that last week we had a long setup coming out of our Tuesday, Wednesday, and our high of the VIX and our lows on the indices were caused by that VIX target. And then we fell out of that target, and then we broke through the long from lows to highs. So we pierced the 61.8% line. The February contract confirmed a downtrend. But note the anchors of this pull here. This is 1580 to the high of the 2215. And the reason we have to go and simulate this draw here is because the new March price is not going to be included in the continuous contract chart until next week, Tuesday. But the question is the March contract defending that pullback? And so when we go to VXH26, the 1580 to the 2215, well, interestingly, the VIX defended a pullback. It ran right to a long setup and defended it. Now, it also has the opposing short, just like the continuous contract. But then the question as we go down to smaller time frames is, did it, as it traded the front run of resistance, break a long setup? From Monday's lows to highs, we had a line in the sand here of the 16. You round down to 15, you add a tick, and it is a 1910. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.